All right, yeah, we can probably get started. Might have a couple people, but we'll try and I'm gonna try and get a recording so I can share with a few people that weren't able to join. But yeah, for those of you that saw, I've got a new crypto trading edge that I've been working on about the last month and a half. It's something I've had kind of in my head for a while, this trading idea, but I haven't had time to actually back test it and fine tune it and kind of figure out the rule sets and stuff. I've been kind of developing edges and things like that. Probably a little less than a year now since I started back testing, last October or whatever. And this crypto edge is something that I've learned kind of recently this year through a mentorship I've got with one of ICT's students. ICT is one of the kind of the top trading educators for retail, and it was one of his kind of students that I'm now learning from. And then combine it with a few of the other things that I've learned, and yeah, I've got this strategy that will kind of actually, I'm not sharing my screen. Let me go ahead and do that real quick. I'm recording it, but let me just share real quick. So yeah, this is the backtest results from FX Replay, the backtesting software that I use. If you guys are unfamiliar, I shared a backtesting field report earlier this month for demoing FX Replay. It's honestly the number one tool for backtesting right now. And a little less than 100 trades, basically the last 6 months of 2023, I tested this strategy, and it was doing basically 25 to 30 R per month. And for trading, the terminology R basically mean a 2R trade is basically, if it's right, you make twice as much as if you're wrong. That's kind of the terminology. So when I say 25 to 30 R, it's kind of relative to whatever you're risking. So if you're doing 1% risk per trade, that would be 25 to 30%, but obviously it can scale if you do more or less risk. But in terms of strategies, that's honestly really solid. My main traditional finance edge that I'm trading right now typically does 5 to 10 a month. So 25 to 30 is pretty awesome. And the average win on this strategy is over 3 times as much as the average loss. So 60% win rate with that is really awesome. And really the only other thing worth mentioning in this backtest is this metric they have called could have profit or break even. It basically tells you how many trades went up into pretty good profits and then ended up being a loss. And it's a little higher than I would like. 15 out of 94s, 16% of the trades. But I don't like to manage my trades. I like to just kind of enter them and let them play out. So for this back test, I didn't do any trade management. I just entered, and then it ended up being a win or a loss. So that's kind of the back test. And then I mentioned the forward test as well. I kind of went back through this most recent month in July, and it's been a really killer month in July as well. 75% win rate. It looks like there were 16 trades. Pretty similar win rate between longs and shorts. And I had to kind of estimate what it would be after fees, but I was estimating somewhere around 35 R for July. So pretty much in line with the back test, and looks really good that it's performing well. And yesterday there were 2 wins that I'm going to kind of go over in detail. But yeah, really excited to dive in and kind of share with you guys what this strategy is by itself. So the first thing that this strategy uses is a concept called SMT divergence. And SMT is basically it stands for smart money technique. Like I said, I mentioned ICT. It's kind of a concept that he teaches. And basically what it means, it's a lot easier to think about it visually versus the text. You look for 2 highly correlated assets. Obviously, Bitcoin and ETH are very highly correlated. And you look for a divergence in price structure. So in this case, you've got a lower high on Bitcoin versus a higher high on ETH. This could hint at a potential reversal to the downside, in which case Bitcoin would be the better pair of the 2 because it's showing relative weakness. So it's likely to outperform on a move down. And then for this one, you've got Bitcoin making a higher high, ETH a lower high, and kind of same, I guess, different scenario. You're looking for a reversal to the upside in this case, and Bitcoin is showing relative strength. So that would be the pair we would be interested in kind of longing. So before I move on, any quick questions on kind of SMT? I know it's a pretty new concept that not many people have heard of before.
I got a question.
Yeah.
It's Mac. If I want to read more about SMT divergence, do you have any recs?
I will look for a few after this. I don't know if I can share this whole PDF. It's from a community that I'm. It's a paid sub, so I mean, in DMs maybe, but more broadly, I can find like some publicly available resources for sure. But
okay, that's
but
yeah. I'll just go on a little Google adventure.
But yeah, it's SMT divergence, and it's an ICT trading concept, if that's helpful. But it's cool because this can apply to honestly any correlated assets. It could be, a lot of people use it for Forex, the pound versus the euro, or silver versus gold, or the S&P versus the NASDAQ. Kind of the same concept applies. I'm obviously just focusing on crypto in this case.
Cool.
So after no problem. And so after you see this kind of initial SMT, then I have basically two kind of entry triggers that I'm looking for. And the first one is kind of an engulfing candle reversal pattern. And for those of you that aren't familiar, engulfing candles, this would be, if price is coming down, we've got like a kind of small bodied red candle, and then you see a really big green candle that like engulfs the entire candle before it. And so in the case I mentioned up here, if Bitcoin had made a higher low for a potential long, and then we saw an engulfing candle on Bitcoin, then that could be like my entry trigger. And I have like very specific parameters for the entry candle, just to like, you don't want any subjectivity when you make these trading rule sets. And so I basically said the engulfing candle has to be at least, the body of it has to be at least twice as big as the body of the previous candle. And if there's any like kind of counter wick to the engulfing candle, it can't be more than like 25% the size of the body of the engulfing candle. So very like, it's very black and white, like if this strategy is producing a trigger or not. It's not just like if it's a big engulfing candle, it's very like specific. And then I have a recent example, and I actually can pull up the chart. It'll be a little easier to show this. This is just, it's the same as the screenshot. I'm just going to show you because you can see the crosshairs a little easier. So it's on the 5-minute time frame. That's when I do this strategy, and you can see here, and you can see the crosshairs on both charts. So we can see that Bitcoin over here made a lower low, whereas ETH made a higher low. So in this case, ETH is the one we're interested in because it's showing relative strength. And then we got that nice engulfing candle. It's definitely at least twice as big as this previous candle, and there isn't a sizable like counter wick. So the entry is basically just after that engulfing candle closes. And for our stop loss, we're going to use the open of that engulfing candle. And you're basically just, for simplicity, if you guys want, you can just do a fixed 3R. I tend to look for like a fair value gap or some other like technical level that's, over 3R. But if for simplicity, you guys can honestly just do 3R. And then, you literally just let it ride out. And it's either win or loss. In this case, we had a really nice win. This one took a little while to develop because it was kind of afternoon. But that's the kind of first trigger, where you have the SMT followed by an engulfing candle on the pair that has relative strength. Enter when it closes. When the engulfing candle closes, stop below the open and ride out for 3R. Any questions on that specific trigger? No? Cool. So the second one is basically a market structure shift followed by a fair value gap retracement. And I'll explain what that means. So for those of you that aren't familiar with fair value gaps, this is a really nice graphic in an uptrend. It's basically like a gap in price between candles. So you can see this middle candle, there was like basically no overlapping wicks on either side of it. So this kind of green area is what we call like a bullish fair value gap. And it like this often provides support on like retracements. And similarly for downtrends, you have a gap in price, no overlapping wicks on either side. That forms a bearish fair value gap. And same thing, if price kind of comes back up, it often rejects off those fair value gaps. So another recent example, and I'll pivot over to TradingView to show you guys this one too. These are both yesterday, so there's like 2 wins back to back yesterday. It's pretty awesome. So we'll kind of go through step by step. So starting with the SMT, you had Bitcoin on the left making a higher high, and during that same period, you had ETH making a lower high. You can kind of see this trend line that I've drawn to show that between these two. And then we didn't get an engulfing candle on ETH. And again, we're trading ETH because it's showing, I guess, relative weakness in this case. Bitcoin was, higher high versus ETH, showing more weakness. So if we're shorting, we're interested in ETH versus Bitcoin in this case. But there wasn't any engulfing candles that fit our criteria. So we're looking for this fair value gap retracement. And so when I say this, I put relative strength in here. I meant to say like in the coin that looks like it's going to outperform in whatever direction we're trading. So hopefully that doesn't confuse you guys. It's technically relative weakness, but it's likely to outperform in this down move. So the market structure shift, I have this kind of blue line here, and you can see after this candle closed, and I'm in Denver, so it's 2 hours behind Eastern, but this was basically at 9:25 Eastern when this candle closed. You can see the previous low is at like 33.6782, and this candle closed at 33.67.09, so it closed basically a lower low. That's our market structure shift, and then what I'm basically looking for is a retracement back into a fair value gap. So it didn't come back. There was a couple fair value gaps here, and you can, if I zoom in a little bit, I have this indicator called Fair Value Gap by Spaceman BTC. And you can just change the time frame to chart, and it'll show up on whatever time frame you're on. So you can see there were a couple fair value gaps up here that didn't get tagged, so I had to kind of follow this one down. And then we had a small fair value gap right here. Let me make this a little more accurate. You see kind of the gap between these kind of candles before and after. There's a fair value gap here, and we got a nice little retracement into it. And that was basically our entry for this. So market structure break, fair value gap retracement, and that's our entry. The stop loss for this one is basically the recent high or low if it's up, if it's a little long. In this one, we use the wick, so that I basically put it up here from this previous high. And same thing, we're targeting kind of 3R. Again, you can do strict 3R if you want. I often will look for like recent, I think I targeted this fair value gap down here. That was, at least over 3R. So this one's a little more complicated. Any kind of questions on this fair value gap retracement? Cool. And so in the field report, I mentioned the stop losses for both of them. If it's engulfing, I'll use basically the open of the engulfing candle for the stop loss, which is the body. And then for the fair value gap retracement ones, I use the recent high or low, and I'm using like the wick extreme for those recent highs and lows. And like I mentioned, I tend to kind of look for fair value gap, high or low, or order block for the kind of profit target. But if you want to just keep it simple, I would just do like a fixed 3R. It won't capture all the potential profits, but pretty close. I think the average for the strategy was like 3.2. So you'll just leave a little bit on the table, but it'll keep it a lot simpler. So look for the SMT divergence, look for that one of those two triggers, kind of place the stop loss and take profit accordingly. And then really the last thing here is I have kind of a few different specific details for this backtest. So I'm in Denver, and I typically like to trade basically New York market open through 1 p.m. Eastern, and obviously I'm in 2 hours behind, so it's 9:30 to 1 Eastern. It's kind of when I like to trade, and so that's when I tested this strategy. But I have actually I've seen that it works in other sessions in the afternoon and the evenings as well. So if you prefer to trade in different hours or different sessions, I'm pretty sure the strategy would work. You'd obviously just want to kind of make sure and backtest those times as well. So then there's a few kind of rules, and these are just things I noticed when I was testing it, that I established some rules to basically make invalidations so that I didn't enter trades that had conflicting signals or different things like that. So there were cases where there was both long and short potential SMT divergence, and so obviously it's not as clear which one is likely to follow. So I didn't do any fair value gap triggers when that happened. I would only take if there was an engulfing trigger, I would still take that, but I wouldn't do the fair value gaps. And then I also wouldn't take the fair value gap triggers if it required a market structure shift. And this actually happened today. So I'll show you guys the example from today to show you exactly what I mean with that. So Let me go back to here. So today we had SMT, a higher high on Bitcoin, lower low on ETH. I was looking for a trigger on ETH, and we had our market structure shift. Let me grab this info line. We had a lower low here, and there were some fair value gaps, but it didn't tag any of them. And then I think I had my trade set out like there's a fair value gap right here. I would have put my stop loss at the high and targeted like 3R somewhere down there. But after this candle here was put in, I'm going to delete this so you can see a little better. After this candle's high was put in and it dropped back down, like in order to tag that fair value gap, you would have needed like a higher high essentially. So this is what I mean. Like I wouldn't take it if it requires like a break in market structure, because that often can like mean a reversal on its own. And then if I was already in an engulfing trade, I wouldn't also take a fair value gap trade. So I wouldn't like double up or anything like that. And then if it was like pretty late in the move, like if this just like continued down and like the first fair value gap retracement wasn't until like down here, like I probably wouldn't take that. I'm really only interested if it retraces in kind of one of these early fair value gaps, if that makes sense. So any kind of questions about these kind of other details that I mentioned? Cool. So I'm going to go through some more recent examples, but I do just want to kind of wrap up the field report at least. Like if you are interested in trading this strategy, the process that I would kind of recommend is backtesting it yourself first. I have obviously that field report on backtesting with FX. I recommend FX Replay, but if you want a free, I mean, it's only $30 a month, but if you want a free alternative, I've got a spreadsheet that I shared in this video as well that you could use. And obviously, if you want to trade either on an exchange or a DEX or a prop firm, I've got another field report on kind of options for trading crypto. And kind of another resort is TradingView's papers trading connection. So in this trading panel here, they have a paper trading option. So you can kind of connect that and then look up any Bitcoin and ETH pair on whatever exchange you want, and you can just practice that way too. But yeah, if there aren't any questions, I'm going to just go through like a few recent examples in July just to reinforce it a little bit more. But feel free to give me a shout if there's any questions. I'll just go through a few of these. Just got to go back a little bit. All right, so that was last weekend. So we had a loss on last Friday. And I'll show you guys kind of why this would have been a trade. Zoom in a little bit so you can see better. And obviously, like in hindsight, it might look a little different, but in real time, like I'm basically drawing these out as it would look. So this was pretty much right at market open, and you can see that between these two levels, and there's a replay function. They could see a little better. Maybe I can just do this. Yeah, we had basically a higher high on Bitcoin, and then I'll do the same thing over here. A lower high on ETH, followed by that red engulfing candle. So basically checked both boxes for the SMT, and then a trigger on ETH. And, the entry was at the end of it, or where the engulfing candle closed. Stop was at the top, and unfortunately this one was a loss. So it's going to have losses. Like any trading strategy, and I wanted to show that it's definitely not always going to have wins, but it did do really well in July. I'll show you these two trades from Thursday of last week. All right, so there was a lot of SMT Thursday. And this is another good example of like the conflicting SMT. So before market on Thursday, we had some kind of bearish SMT here between a higher high in ETH and a lower high in Bitcoin, and we also had some potential bullish SMT between kind of these pivot lows. And so I wasn't really interested in any fair value gap retracement triggers because of the conflicting SMT, and ultimately like kind of just didn't take any action on this initial move. But then we got some nice bearish SMT here. You can kind of see between these highs, we had a higher high on Bitcoin and a lower high on ETH. And then we got a break in market structure. And this one was pretty, actually, no, it wasn't like that tight. But, so that was kind of the low we had. And then once it closed below that, we had a little, it was really small, actually, this fair value gap. There wasn't a whole lot of room in between previous candle and the close. Basically, like right in here was our fair value gap. It was pretty small. But we had a really small fair value gap that was kind of our entry. And like I mentioned, we'll use the previous high as a stop loss and target 3R for the take profit. It's a really nice win there. And then later in the day, and this, I didn't actually take this trade, but this is to show you that the strategy does work kind of in other periods as well. There's two more wins basically later in the day that if you would have continued to trade, there was a short that was profitable and win, but I didn't record these in the forward testing because they were outside of the hours that I wanted to test. Any questions on a couple of these examples that I've shown? Let's do a couple more. So, all right, Wednesday. And sometimes there will be SMT without a trigger. Like you're not going to catch every single move, obviously. But I think this is another example where there was conflicting SMT on both sides. So there wasn't really any trade unless it was an engulfing trigger. But we had a trade the previous day, so let's look at that one. All right. Actually, we had two trades this day. So this was Tuesday. And so our initial SMT, we had a lower high on ETH and a higher high on Bitcoin. So we're interested in ETH in this case. Our break in market structure was after this candle closed below this low. And then we had a fair value gap here that once we retraced into it, that was our entry. The stop loss was this recent high. And we targeted this low basically for 3R. And then later in the day, we had another trade. It was actually while this ETH trade was live. So you had a higher high on ETH over here and a lower high on Bitcoin. Then we got our engulfing trigger on Bitcoin. You can see this red engulfing candle was at least 2 times as big as the previous candle and didn't really have a kind of counter wick to the direction. So enter at the close of this engulfing candle, stop loss at the open of it, and we targeted another 3R. So this was another day that had 2 wins back to back. So yeah, I would say it's not the easiest strategy. Like some strategies, it's literally just like look for a change in market structure, put a fib on, and enter here. Like some strategies are a lot simpler, but I would say this definitely isn't the most complex. Like I think this is someone that you can learn if you backtest it and kind of build some repetitions. Like identifying the SMT is probably like the hardest thing. The triggers themselves are not that difficult. But yeah, let me know if there's any questions you guys have in the chats. But I don't need to keep sharing more and more examples. What do you guys think?
I think it's very interesting the tools you found. I'm having a little bit of trouble like trying to understand the triggers you call the market structure, but I think that it's a bit more of practice than seeing the blue line, the light blue line. Yeah.
Mm-hmm. Yeah. So when I say a market structure shift, and I can just kind of use some empty space over here, I'm basically saying like, okay, say that we have kind of an uptrend going on, and then at some point we break that market structure. And so this is basically like where I would have drawn that line. So you can kind of see we're forming higher highs and higher lows. and then at some point we have a lower low. And that's basically what I have drawn here. We had a little kind of low right here, and then once this candle closed below that, that would be a shift in market structure.
Right. So they're quite tiny.
Yeah, for 5-minute time frame.
I'm used to like more macro things. I'm like, oh, this is so tiny.
Yeah. Yeah, I mean, it definitely will take a little bit of practice, but there are some indicators that can help with that. It's just I prefer to keep my chart as clean as possible, so I try not to rely on a bunch of other indicators and just like look at it myself.
Oh no, for sure. But say like the example we're seeing right now,
Mm-hmm.
like we are having like it's a downtrend right there, right? And we have like a big drop.
Yeah, the broader time frame, downtrend. But in this short little move, you got an uptrend, obviously.
Right. Oh, right. Okay.
Yeah. So it's basically like after you see, like you have to see the SMT first. Like otherwise, there's no point really even like looking for anything. But then after you see the SMT, that's when you kind of are looking for either that engulfing candle or the market structure shift. And honestly, if the engulfing candle is easier, like you could just trade that trigger. You don't have to take this other one too. I think the engulfing one is a lot more straightforward. So like if that's where you wanted to start, you could just do that. I think it's maybe 40% of them are engulfing, I think, if I remember. So.
Great, thank you.
Yeah, of course. Any other concepts or questions from anyone else?
Really appreciate you running through it, Fib.
Yeah.
Everything's out there in the field report as well for anyone that wants to go back and get a little TLDR, read the notes, and kind of get a little step-by-step. So all around.
Yeah, and I'll share this recording too if you need to watch it back a few times to get some more practice. And obviously happy to, if you are testing it and you're looking at a couple examples and you're trying to figure out if this was a trade or not, just give me a shout and I can take a look and give some feedback too. But yeah, it's definitely executing any edge. Like obviously finding the edge is a big part of it, but once you have an edge, it still takes some work to like learn how to properly execute it, which is why I kind of recommend backtesting, practicing a little bit. Obviously, like don't just take a live account and just start trading without like practicing and making sure you like fully understand it first. But yeah, this edge is really promising, and I'm pretty excited to start playing around with it a little bit more myself. So yeah, if there's nothing else, like I said, feel free to reach out with any follow-up or questions, but I'm glad you guys could join and check it out, and yeah, we'll catch up later.
Thanks. Hey, Fib, did you want to plug, I know you've been doing some great stuff on YouTube as well. Did you want to plug it, your YouTube and maybe drop a link in VC Hangout chat and maybe get some traction there as well?
Sure. I most of the videos that I've shared, I also obviously upload them to my YouTube so you can navigate it to it from there as well. But I'll drop it in VC. Yeah, that's my channel where I have kind of most recently I shared obviously that BullX video, the backtesting video, and then I think this video is really good as well, just like how to consistently trade an edge. So those are out there, and I'll continue to share additional stuff out there as well.
Beautiful. Everyone, feel free to like, comment, and subscribe on that old YouTube world there.
So, yeah.
That was great.
Of course. Yeah, like I said, feel free to reach out, but I hope you guys found this helpful, and hopefully a few of you can learn it and start trading it.